Okay, so apologies, guys. Was connected to the wrong mic, but I think we are correct to the right one now. Anyone in the chat, feel free to let me know. But yeah, so we'll start with the USD pairs. We'll go through a bunch of different markets. I'm quite interested in BTC this week as well, but my main focus is EURUSD. So I'll start with that. We'll go through some USD markets, take a look at some cryptos, gold as well. Interested to see how that does pan out this week. But we'll start with EURUSD, which of course has started pretty bullish. Now, if you didn't catch the weekly analysis going into the week, I did say I'm pretty bearish on the USD pairs. So pretty bearish on, say, appreciate it. Thank you, man. So yeah, I'm pretty bearish on the USD pairs. So looking for dollar strength this week and looking for shorts in pound, shorts in euro, shorts in Aussie dollar. And we did start off the week in that move, but of course that has since bottomed out and reversed. Now the week is still young-ish. It is Wednesday, and this could be looking at a turning point. So I'm still looking for shorts for EURUSD. We'll go through the other USD pairs momentarily. But as price does come back to the high here, I am interested in taking some sells to see if we can revert back down. Now, it looks like we are forming some type of consolidation, so I'm no longer going to be super bearish, especially in terms of a big continuation like this. Of course, that could happen. But we've got evidence of price finding support and forming lows here. So it's going to take some force for us to actually break through that and see some bearish momentum. So I'm looking for naturally shorts as we come back to prior week highs. If you look at the past 2 weeks of price action, we formed a high over here, formed a high over there, and now price is coming back into that same vicinity. So especially intraday, this is naturally going to be a healthy place for a short, and we could be looking at 50% of this leg here. So if I whip out the fib from the high to the low, naturally going to be around this kind of territory here. So that's really the move I'm looking for this week. Now that move could persist all the way back to lows. It could persist even further, but I'm not going to be trying to be too greedy with targets, given how price is moving. We're no longer in a free-flowing bearish market as we were past few weeks. This is certainly a different stage. We're in a consolidation. We could even break higher. So I'm going to keep a close eye for some shorts this week for Euro. I did actually take a long early in the week. I'm sharing some ideas on the Telegram group. If you guys haven't checked it out, feel free to go do so. But I did take a long position over here on a retest of this low. It didn't play out. Price did push a little bit low before we had the recovery. I was just looking to try and fade some of these lows because the market was quite stretched. I was anticipating a bit of a pullback, which did happen. Just I was a little bit too early to the party. But now that we've got this move here, I am looking for some shorts in the opposite direction. So I'm going to wait for London session to play out. So by the time New York kicks in about 3 hours time, I'm going to look to see if I can find some entries to take that rollover to the downside. So I'm not looking for entry just yet, but keeping a very close eye on some shorts in Euro, just looking for that rollover from prior week highs. If we take a look at the DXY, which is going to be quite interesting. What's up? I appreciate it, replay. What's up, shiny yellow metal? What's up? Hope you're doing good. DXY looking to reject the 100 level a few times, looking for more gold buys. Interesting. Yeah, I do think with gold, not gold, sorry, with the DXY is just basically what we do at this level will define the next 2-3 weeks of price action in my eyes. Because all we have here is a pretty textbook consolidation. We've got equal highs running through the market, equal lows running through the market around 96.5, and we've just been fluctuating back and forth. And at the moment, so far this week, has been a solid rejection of that high. So if I go to the daily chart, you can see price looks as if it was having a go at a breakout, but then Tuesday's candle closed firmly back within that range, and now Wednesday we're seeing a bit of follow through. So essentially, if we don't get a breakout of this area, you're naturally going to see a bit more weakness in the USD anyway. And I would be looking at that midpoint as a healthy target. So if I make this just a little bit clearer, let's make that white. and stand out a bit more. So this here is roughly the midpoint of the range. Now the midpoint is a natural place of attraction for price because this is the equilibrium of buyers and sellers. Buyers are doing a good job of holding support here. Sellers are doing a good job at holding resistance above there. So the fair trade, the fair value of price would be that midpoint. So it's going to be a natural pull on price. So having a target there is actually quite a smart thing to do. It's essentially the mean. So if we do reject this area well, which so far we're doing, we probably have a good chance that we could see a push back to the midpoint, which would take us to 98.563. Of course, under any circumstance, if we do suddenly get a breakout, well, then we're looking at potentially a trend forming, but we're not quite there yet. So at the moment, we are seeing a pretty significant rejection. If momentum continues, I'm looking at a push to around the 98.5 area. So if we do drop to the lower time frames, essentially what I'm looking at for the DXY, again, is probably going to be a little bit of a pullback as we come into this zone. And then we'll see how price maneuvers. If we do top out, this could be the leg we're looking for that continuation back into the midpoint. Of course, I'm not looking to short the DXY now, especially after such a big move. So I'm looking for the temporary move to the upside, which correlates with the move on Euro I just spoke about. Short-term sells on Euro, short-term buys on DXY. This could turn into a breakout. We never know. We're always just reacting to price, especially as technical traders. We're always just reacting to price. So we're coming to a area where I do anticipate some upside, and then how that upside plays out will then make my bias probably for the next 2 weeks. If we do start to run out of steam, fatigue, this could be a really nice short opportunity, maybe sometime next week. And of course, if we suddenly get a breakout, well, then it's just going to be pullbacks probably for the next month or so. So yeah, DXY, interesting. It's definitely rejecting highs now. And of course, if DXY does continue to the midpoint, you're probably going to see weakness across the board in USD, and potentially some buys on gold could be a smart play. But yeah, the technicals look interesting for the DXY. So short-term buys in this zone, looking for some USD strength. And then as we have a pullback, I'll probably say again, the midpoint of that pullback, as we get to roughly this territory, this is where potentially some sells could look good. Of course, we'll have to wait for price to get there and see how it reacts, but that's kind of the area, the ballpark I'm looking for. So potential buys and then some shorts lower down. Looking at the daily chart, still respecting the current uptrend channel, but looking after the bigger picture, similar to where we sold off heavily. Yeah, of course, gold buyers looking at 46. Okay. So yeah, if DXY does reject the resistance 100, which is a significant level on the daily, then of course USD weakness could cause some strength in gold, and of course buys could make sense. But we'll go take a look at the technicals on gold, because of course they have to look good too. The DXY isn't always the best indicator of what gold is going to do, because you can have some external fundamental factors of why people are buying or selling gold, despite what USD is doing. So DXY is a good metric, but of course the technicals and gold are going to be that more important. But of course, DXY is definitely a strong confidence. So yeah, gold, really nice rally this week. We spoke about this last week as well. If you didn't catch the last week's analysis, we basically said, okay, we've got this low here. Price had a very aggressive move through the low. But by the end of last week, Monday, if we're going to the daily chart, you can see we actually just pulled all the way back up and just left a massive wick. So that tells me that, okay, despite all the selling pressure, sellers weren't able to sustain price there. Buyers came in thick and fast. And then we maintained support. And then Tuesday's candle got a nice breakout, and looks like momentum's kicked in. Now, we're already coming into the midpoint. So I don't really see much opportunity for a buy actually for gold, to be honest. Just because after such a big move like this, the main attraction for a buy for me is always going to be the midpoint of that move. So, this is the Fibonacci from the high to the low, and this is the midpoint 0.5. So that's going to be a natural attraction, and we're pretty much there already. So for me, the buys have kind of played their part. And I say that because, of course, price could continue higher, but this is now roughly an area where if sellers are still going to persist, this is where we could see the next bearish leg. So I don't really want to be buying into that necessarily. I mean, potentially in terms of the technicals, we could see a short-term dip and then a continuation. But just the way I like to trade, especially after such a big bearish move, I'm always looking for that midpoint. And if price is roughly trading there, then I don't really see much edge to extract. Unless we have a big kind of V-shaped pattern. And then, okay, I can start to look to target this high. Because that for me is a full reversal. But we're still quite not there yet. I need a bit more development for me to say that, okay, we've got a V shape, odds of probability are high, not quite there yet. So yeah, if DXY does sell off, of course, naturally you will be favoring gold buys. We are seeing price respect support very, very well. Momentum's picked up as well. So things are looking bullish for gold, but now we're coming to the 50. Now is kind of a new kind of dynamic. I want to see what price does at that area. Do we reject it well? There could be some short-term sells to be looking at. Do we just break straight through? Of course, that shows the buyers are really, really strong. Perhaps you could be looking at for continuations for the rest of this week and maybe the rest of next week as well. So that midpoint is kind of just an area to keep an eye out for, I would say. But yeah, of course, USD is going to be have a big part to play. And if you have a look at some of the other USD pairs like pound USD, again, I still do like pound USD lower. I'm still looking at push to 1.31 for pound. And so the bullish momentum we're seeing Tuesday, Wednesday, that for me is still a nice short. But again, it doesn't really correlate very well with the DXY. So again, you don't want to be so much of a predictor. You want to be so much more of a reactor. So because the DXY is not really playing ball, I probably would be looking at some short-term sells for pounds, similar to the idea I had on euro. So you can see this is last week's price action. I think that midpoint there would be a very nice place for a push back down again. Again, I'm not going to be trying to greedy, trying to push back to these lows or even the 1.31 mark. I would just say, okay, we can probably pull back halfway and then maybe price finds support and then continues higher. But by then, you could probably extract some really good profit. So pound USD, I like the sells as well, but I would wait for price to push a little bit higher, 1.336 roughly, before I would start looking to sell. And then we'll see what happens from there. But as I said, I think euro looks a lot better. That's really where my focus is going to be. So I'll keep a close eye what we can do at these areas. Some back testing we'll be doing at these areas, and hopefully we can take some shorts from there. And then maybe the midpoint areas where I'll target. In terms of Aussie dollar, I think that's also a nice short as well, because we did see a really nice breakout for Aussie. We are climbing back in sort of, but I would wait for the day to close before actually saying that, okay, we've got the break, the fake out essentially, because we had 1, 2, 3, 4 candles operating below. If we close back above, I wouldn't necessarily write off the breakout, but that would lower the probability of continuation. So yeah, if we close twice above, then I would say it's invalid. But if we close once, and of course the next candle closes back below. So for example, let's say if today's candle closes above, but then tomorrow's candle closes back below, well, that's just the rejection in my eyes. I'm looking at continuation. But if today's candle closes above and tomorrow's candle pushes and closes above too, yeah, that's looking like a fake out. After that, you can probably see a bit of a correction and then probably continuation back to the midpoint of the range, potentially back end as well. But midpoint is your safe bet, your high probability move. So again, if you got a fib out there, that midpoint is going to be a natural place for price to push towards. So if we do push back in 2 consecutive daily candles above support, correction, continuation around 0.704. So there's some nice opportunities here. I mean, I was pretty bullish on the dollar, but now that we're seeing price action, I may have to be a bit careful with that bias and potentially look to switch it around completely as well. So yeah, we'll see how Aussie does react there. Dollar CAD was, of course, very bullish past couple of weeks, but now it's hitting some resistance. So being a bit careful there for dollar CAD. You can see we came back into the high, spike through it, and closed back below as well. And you can probably expect to see a bit of a pullback of this bullish leg here too. So if I whip out the fib there, again, probably a pullback here is quite a lot. Yeah, a pullback there is quite big, but that's naturally the next level of support. So in terms of risk reward, dollar CAD has some really nice opportunity. In terms of a stop loss, I probably would want it to be above the high there. But what you could do is you could look for the pullback of this bearish leg here. So you can drop a bit more intraday. Look for entries on that pullback and then have a stop loss there. That way you can maximize your risk reward and still look for a big push. So yeah, a lot of these USD pairs hitting some big areas where we could look at turning around essentially. And especially if price does continue, I would be careful. No problem, shiny yellow metal. Happy to help. What's your times 2 or 3 pairs you're watching to trade? For me, it's primarily Euro this week. Pound USD would be the backup, but I'm mainly focused on Euro USD shorts as we're coming back into the highs of the past 2 weeks. So yeah, I'm looking at shorts for Euro, Pound USD shorts as well, but I need price to push a little bit higher. It's effectively the same trade. So I'll pick the better one. At the moment, Euro is looking a lot better, but I don't know, maybe Pound USD catches up for whatever reason. I might take some shorts there, but Euro is my main focus for some downside this week. Short-term downside, I'm not looking for the full, complete turnaround. But yeah, Euro USD shorts is my main focus this week. And then I'll keep an eye on Pound. It's essentially the same trade across the USD pairs, which is we failed the breakout on the DXY. Now it looks like we're turning around. So, yeah. Basically looking at short-term buys here for some longer-term sells, provided we don't see the breakout. So the bias is long, short. But again, very, very hypothetical. We need to see how price reacts at these areas first. Even here, I'm not quite ready to buy. But I am looking at Euro. So again, if we flick over to Euro USD, I am looking at some shorts in this area here. All across here is my area of interest. And I'm looking to get involved in the New York session. So I want to see if price can maybe consolidate the rest of London, push up back to highs. I can get a stop loss above here, reject it well. Then yeah, I'm looking for a sell. And then targets, hopefully maybe the midpoint of this impulse. So maybe around 1.153, anywhere around there. That's where I want to take my profits. Maybe leave some to trail just in case we continue. But yeah, that's kind of my plan. And of course, with Pound USD, it's essentially the same, but we're just not quite at the level I want to get involved yet, which is up here. So I need price to push a lot more to the upside. So this could be a trade maybe Thursday, maybe Friday if we keep trending, or it might not even get there, so no trade altogether. But if Pound USD does push there, again, looking for a similar trade on the way back down. So that's really where the focus is for myself. I entered on USD, same setup, got stopped. I don't know, maybe I was a bit early. Again, stop losses are part of the plan, my man. Again, with breakouts, there's always the chance that the trade's going to fail. I mean, with every single strategy, there's always the chance the trade's going to fail. As long as you took the trade when conditions are ripe for continuation, because again, effectively a breakout is essentially saying that I'm expecting price to continue in this direction. So as long as the conditions favor that probability, you did everything right. And of course, even within that, you'll still take losses, which, this trade does prove. But I like this trade a lot. Clear support level, clear breakout on the daily. I'm not too sure your execution time frame, but there's high time frame confirmation here. It's not like price closed below the level on like an hour chart and it was just a wick on the daily. No, the daily kind of backed that intention as well. But of course, it looks like momentum's died out. So yeah, potentially you were a bit early in hindsight, but in terms of just trading an edge, you're doing exactly what you should be doing, looking for momentum, looking for price to clearly break support resistance, and then you're looking for the continuation of that. Sometimes you will catch the continuation, sometimes you won't. As long as you're managing risk and allowing yourself to catch the bigger winners, you're doing everything you're supposed to do. Of course, from trade to trade, you might be early, late, etc. But again, that's the ambiguity in trading, the uncertainty. You don't know, so you just got to stick to the plan and keep taking those trades. But yeah, it does look like price is pushing back. But again, today's still effectively young. This could be just a big wick. Let's not rule that possibility out. This could pull back, close down here, a really nice wick rejection, and then Thursday, Friday we could roll over. That gives you another opportunity to get in, this time on a nice break and retest. So that's still a possibility, but of course we'll wait for the end of the day to confirm that. And yeah, maybe it is a fake out. Maybe it is a fake out. Maybe price does close back within the range. Maybe tomorrow's candle confirms that too. Well, if that's the case, we can use that to our advantage as well. Now we're not looking for breakout plays. We're looking for we're looking to take advantage of a fake out. We're looking to take advantage of liquidity. If price faking out to the downside, now we've got opportunity to continue back up again. This is the midpoint of the range. That's a pretty high probability place that price can push towards. So, you want to stay flexible, but understand that you will be late, you will be early. Can only know that after price is done, which is all part of trading, which is why trading is difficult, because you're effectively placing bets that you don't know will play out. And that's where the stress, the emotional burden comes through, because you're placing bets where, yes, you might have data to support that trade, but individually that trade could fail. And it's just about managing that uncertainty, which is why we manage risks, set stop losses, etc. And as long as you play the game how you're supposed to play it, as long as the markets don't change fundamentally, the edge is there. CAD yen, we could take a look. Yeah, yen pairs have been very interesting. I haven't really been focusing on the yen pairs too much, but I had a flick over them yesterday and they're looking pretty bearish. So yeah, we can definitely go through some of the yen pairs. We'll take a look at CAD yen as well. CAD yen looks like a beautiful buy. Okay, we can absolutely take a look at that. Replay took it on the 4 hour. Yeah, exactly. But now I am a bit more like not confident again. Yeah. Trading is all of that. You're just managing the confidence. I mean, to be honest, if you want to perform at your best, you can't be relying on confidence, because confidence is sometimes strong, sometimes weak, and that's just going to affect your P&L forever. You want to have an approach which doesn't rely on confidence and just relies on systematic opportunities. Your confidence is going to fluctuate within that, but you still take the same trades with the same execution, with the same risks, same targets, etc. So try and separate the confidence from the strategy, because if they intertwine, then it's doable, but you're going to be fighting an upward battle there, because in the days of low confidence, you're probably going to make forced mistakes, which is going to hurt your P&L further. But again, easier said than done. We'll take a look at CAD yen. You mentioned beautiful buy. So yeah, I mean, we have been bearish for the past few weeks here, but let's not get ahead of ourselves, because many people see this bearish leg and think, oh, the trend's over, let's start selling. When in actuality, if you look at the stats, it's probably just a pullback. Again, we don't know. It could be the top. We could be reversing. But if you look at the market structure, no key low has been violated. If you look at the consistency of the trend, it's been trending since April last year. So about a year we've been trending. The odds of this being a reversal is quite slim. Of course, a reversal will eventually happen, but let's wait for structure to be violated first, and then we can say reversal. So until you actually take out this low, I'm focusing purely on buys for CAD/GBP. If you're looking for a swing trade, of course, there will be some short-term sells you can take advantage of. But if you're looking for swing and direction plays, buys is still your safe bet. So yeah, absolutely, I'm looking at longs here for CAD/GBP. Last week analysis, we did speak about CAD/GBP. I said if we can sweep this low, respect it, this could be a nice place for a buy. Did not look like we saw that happen effectively. Price did break through, came back for a retest and sold off. So there was no kind of a strong rejection there. Hence why we saw a bit of a continuation. But the buy still makes sense in terms of direction. In terms of actual trade, now I probably wouldn't be looking for entries just yet. I say that because I don't really have an effective place to place a bet, to place a trade. Because when I want to take a trade, I'm always betting that a certain area is going to hold. That could be a weekly low, it could be a support level, it could be a break and retest of a prior resistance level or weekly high. So it's got to be trading at a significant place for me to bet that that area is going to hold and then the trend will continue. Not really trading at a significant area, at least that fits the way I try to trade. So if I do whip out the old Fibonacci from the high to the low, we have broken underneath the 50 there. So I do want to see us reclaim that pretty quickly. If we hold below the 50, that does increase the probability of a larger pullback, potentially even back to lows here, which is, again, doesn't invalidate the trend, just means we have to be a bit more patient with the buys. You could be very, very patient and wait for price to now break structure back again to the upside and then look for opportunities afterwards. That would give you a more high probability of continuation. It might not give you the best entry. You might enter a little bit later, but you can be a bit more certain. Not certain, that's the wrong word. You can have a slightly more probability that the trade will be successful, at least in terms of direction. Stop loss placement, that's a whole different situation. So yeah, there's multiple ways to trade it, but in terms of direction alone, I do agree. In terms of where we're trading to try and find a buy, I don't really have any effective place to support a trade. So I would be a bit more patient. Maybe let's say if we find support here, push up a while and then come back to respect it. Okay, I can be interested there. Or maybe if we push to the highs, break structure, come back and respect some support, again, I can be interested on that. So I would wait for a bit more development for CAD/GBP, but I do agree in terms of the situation. I'm looking at continuation there. And off the, okay, 0.618 fib, weekly buy, fair value gap, tight stop loss, big risk to rewards, 118. Okay, so you're looking for the full continuation to the prior highs. I think that was, yeah, back over there. So yeah, I'm still looking at the same trajectory, to be honest. So I do definitely agree. And again, you've got some confluence there as well. We're all going to have our requirements to take a trade. They would differ. But yeah, I do like the directional play. So I would wait for a bit more development before getting in. But again, that's just my preference and how I look to trade. But sounds like you definitely got your confirmations there as well. So definitely agree with the move. But yeah, nothing quite there yet. And looking at the other yen pairs as well, if you take a look at dollar yen, for example, again, that's seen some downside. But again, if you look at the market structure, it hasn't done anything significant. You know, this is our last significant low down here on the daily chart. Now, of course, waiting for price to break that is going to take forever to classify breaking structure, but that's effectively the trend we have in play. You know, price has been trending again since April last year. We could very much have a dip within this and still continue. So you don't want to write off that larger pullback. But equally, you know, there could still be some short-term sells within that. You just, you know the game you're playing. But yeah, for dollar yen, we're seeing some downside momentum here. I'm looking at this low here. This is kind of like our intermediate 4-hour swing. If price can stay above that, then you're very good to be looking for longs intraday. We'll come back into an interesting area here. I think we probably dip below the 50 here as well. So yeah, that kind of lowers the probability of the trade unless we can recover it pretty quickly. So yeah, I don't really see a clean opportunity to long dollar yen. I did say on the weekly analysis that if we can have a nice break and retest of this high, that would be a really effective place for a long. But of course, we've broken underneath that and actually retested as resistance and sold off. So that's completely the opposite situation here. But what I would say is if we do push back to the low here, this is an interesting place for a buy because effectively we've got a range. So you got equal lows, equal highs. Again, that's your midpoint there, roughly. If price can push here, naturally that's a nice place for a buy, at least to the midpoint, and then potentially to the opposite swing. And of course, if price breaks through that, then we might be seeing the bigger pullback on the daily we mentioned, maybe 155, 154. So dollar yen still very bullish as well. I don't really like the area we're trading at. We might bounce, but I don't really see that as much as a very significant area. This would be a lot more significant, and I'll be more interested for a long there. And of course, if we do have another breakout, well, we can see if we can get a successful retest for a long as well. So that's something to look into. But in terms of the larger trend, which is, again, effectively what we're using for direction, it's still in play. The buy still stands. So primarily focused on longs. Any shorts will have to be a short-term outlook. Take a look at GJ as well. Pretty much the same idea. Seen some downside, but again, it hasn't done anything in terms of breaking significant structure where I would say I'm bearish. It is stalling. That's definitely what's happening. Price is stalling. We've been back and forth for the past few weeks here. Haven't really seen any new highs, but again, it's not a situation where I'm start to look for heavy shorts. We have come back to another interesting area, which is support here. And now we're back here again. If we can hold this could be a nice cue for some upside. If we break through, I'm looking at pushback to support here at 207.5. I probably would wait for the daily to close to justify this support as holding. Intraday is a bit too messy. You can see we didn't really effectively hold it there pretty well. We've dipped below a few times. So I'd wait for a daily chart to confirm if we're holding support or not. But either which way, this is a nice place to buy or sell from. I'm not really focused that much on the yen pairs entirely, to be honest. I'm more focused on the USD pairs this week. But in terms of direction alone, I do think there's some opportunities, especially if you're looking for swing plays. I do think that's where a lot of opportunity is lying for the yen pairs. If you go to take a look at some of the indices quickly, because they've been pretty interesting. Of course, they've been very bearish, but this week they've been pretty bullish. So it's a situation where we're kind of just looking for where the bottom is. Alan, yes, I could take a look at Aussie New Zealand dollar for you. Absolutely. I'll just go through the S&P quickly. And of course, if anyone has any other pairs to request, just stick it in the chat and I'm more than happy to take a look. And of course, if there's a time frame you want me to go through as well, let me know too. I can absolutely take a look. But yeah, I'll go through the S&P first quickly. So with the S&P 500, again, we had a very bearish week last week, and we've probably already reversed more than half of that. But I was actually looking a lot at this area, 6K, slightly above 6K, 6,100. If we can have a nice retest of that, I think that would be a very nice play for like a position trade, to place a bet and kind of hold throughout the rest of the year. Just our pure technicals alone, a pullback that deep, normally a great place to buy the S&P historically. So I like that level of support. Not too sure if we'll still get there, but if we do, keep an eye on that area. We had basically the same pattern over here, which was the last time we had a really big pullback. You can see the prior high came back for the retest. Lovely continuation. Great place to place some buys there and just hold. So effectively, we're looking for the same pattern here as well. Retest the high, place some bets there, looking for the continuation. So if we get there, we'll keep an eye, but of course, we're not quite there yet. This has been a pretty key support level, which looks like price is just climbing back above. This could be one or two things. this could either be price having a really big breakout of this support level. So if we can now hold this, this becomes a very nice place for a buy. And again, we're looking for that full reversal back to highs. You don't necessarily have to be looking for that, but if you're looking for trend plays, if you believe in the S&P, if you're looking to follow that that natural uptrend that the S&P has, it's a very nice place to position yourself long and hold. So I am keeping a close eye on that because I do think there's a clear opportunity there. The other situation this could be is it could just be a very deep, very volatile retest of support. So it could be price breaking through, having a very expansive retest. Then maybe the next couple of days we close back below and the trend persists. So it's either or really, but either or we can still profit from both. If we have the full swing or we continue down, these are still meaningful moves in both directions. So opportunity is still very much there. The real question is, successfully pinpointing which direction it is. At the moment, I would say it's too early to suggest, but because this has been so aggressive, I'm definitely leaning towards more of a bullish bias for the S&P and looking for this type of opportunity. But I'll probably wait for today's candle to close, maybe even tomorrow's, depending how today's closes as well. If it does start to hold support, that for me is the signal for a long. If, of course, today closes right back below, then we're probably looking at more of a retest. But yeah, this could either be just another lower high forming and we could come back down, or maybe this is something new. So I need more information before suggesting either. But I would say significant area we're trading at, so keep a close eye, especially if you're looking for long-term plays. In terms of Aussie New Zealand dollar, this one has been very, very interesting, very clean trend. We broke out of that long-term range for the past few years, very clean breakout. Now, if you go to the monthly chart, where could we be heading? Now, I'll be looking at this kind of area, the support we had just before we had the breakout. This is naturally an area where price tends to come back to revisit, especially after such a move like this. So to me, looking at the technicals, there's still a lot more upside to be had. Still a lot more upside to be had for Aussie New Zealand dollar. I'll be looking at 1.23, 1.24 in and around those areas. So if you are looking at opportunities, I would just say as long as we maintain structure, as long as this trend still stays within characteristics, so we don't suddenly see price does something like that. As long as we stay within these higher lows, then buying the dips makes the most sense, taking it back to highs. But even if we break through highs, there's still logically higher prices for us to hit. So clear trend opportunity, still distance to achieve, still higher prices, which look likely to be hit. As long as we stay within the trend, buys make the most sense. So dropping 4 hour, I would say keep an eye on this area. This might give us potentially a bit of a pullback. And then I would say if we can use this consolidation as support, that would be an effective place for a buy and a continuation, at least a push back to high. So I'm really liking Aussie New Zealand dollar. Not really a pair which I'm a fan of just because it chops around a lot. I mean, ironically, it's a ginormous trend right now, but historically very choppy. Doesn't really move that well. Spreads are not pretty great. Does wick around a lot. But of course, this is the rare occasion where we're seeing a really nice trend. So if you're focusing on Aussie New Zealand dollar, this is probably the best time to trade it for a very, very long time. So yeah, if you can persist with this uptrend, we formed a nice consolidation here. I would say if we can stay above that, clear buy. If price goes and breaks through, it doesn't really change anything, but it means I'll be a bit more patient for the buys. Just because we could have a deeper retracement. That could take a while, but it looks as if we found a floor. It looks as if buys are kicking back in again. Let's see if they can hold that ground. If they do successfully, then you've got some real risk reward to take advantage of there. And then, of course, we still got higher prices to be hit as well, likely. So, yeah, I wouldn't be buying yet. Approaching resistance, not the best time to execute longs. But if we can actually hold that, that'll be beneficial. And then take advantage of the continuation. But, yeah, trend looks really healthy. Momentum looks good. Still room to the upside. I think it's a very safe bet for a lot. So yeah, keep an eye on Aussie, New Zealand to the upside. Like I said earlier in the stream, I'm also keeping a very close eye on Bitcoin. I'm looking for some momentum plays here because we've been in a really nice consolidation for a while. And I'm expecting eventually something like this to happen. Long-term consolidation, breakout, that's the opportunity I'm after. Of course, this could be in any direction. We could consolidate and break higher. We can consolidate and break lower. So it's effectively you're trying to not guess which way, but you're trying to wait for price to show the likely direction, and then that's when you want to start looking to execute your positions. Right now, we're still very much well within the range and not really showing any progression in any direction. It looked as if we might get the breakout, but it failed. Now we're back within the range. Let's see how price does maneuver from here. But I think over the next maybe few weeks, we could be seeing momentum like this. Again, similar to how we had this move as well. This is what BTC tends to do, and a lot of the cryptocurrencies do as well. They have these long-term consolidations, and then they finish them with really aggressive breakouts. And that's because we're not really, these markets are not as liquid as FX pairs or even the major indices. So when there's a big disproportionate environment between buyers and sellers, we get these really aggressive moves. And again, typically they come after the consolidation phase. So now that we're coming into another one, I'm basically trying to catch the relief of that. And again, you can go through a lot of price action. You can see price consolidates, gives you the breakout, consolidates, gives you the breakout, consolidates, gives you the breakout. You can literally go through all price action, consolidates, gives you the breakout. So it's how BTC and pretty much all the cryptocurrencies do move. All it takes is a few big players to give you these moves here. So now that we're back in another range, I'm trying to time that breakout, but easier said than done. But out of pure risk to reward, it makes so much sense to be looking for those plays, because you can have a very low win rate, but if you can time one of these right, you can make 10 plus R. So effectively, you can make very good gains even with a 20% hit rate. So yeah, I'm looking to time those moves. Now, again, it could happen next week. It could happen maybe in 2 months' time. So the important bit is between now and the breakout, not just to take random trades and just give all your money away. So when you do catch the successful move, it's actually just making back what you lost. The situation now is to have small losses, logical losses, and then of course capitalize on the bigger gain. And of course, that's going to be the real driver of the equity curve. So going to keep an eye on BTC. The real focus will be at the lows and at the highs, gauging momentum there. You can see we have this big candle, but then price dips back again. Big candle, but dips back again. And one of the ways I'm keeping a close eye on this is looking at the ATR, the average 2 range. So if that's increasing as we get a breakout, the odds of a sustained breakout is pretty high. So you can see the ATR here. Let's make that a little bit brighter. So you can see the ATR here, which is just the average range of a candle. So this is set to 14. So it's looking at the last 14 candles. What's the average pip distance from the high of the candle to the low over the past 14 candles? So of course, if that is increasing, it means we're seeing more activity. So if you get a breakout, there's a chance of continuation. If it's decreasing, that means we're seeing less activity. So if the market is breaking out, but the ATR is falling, there's a bit of a contradiction there. So you're not going to really trust that breakout as much. This works as well with FX pairs, but not as effective, just because BTC less liquid. You can kind of see the obvious buying coming into play. So yeah, you can see the past times here we did have ATR steadily increasing there. Didn't really persist much, and you can see the ATR fell straight away. And you can especially see with this breakout here, the ATR was barely even rising. The ATR has been falling. So this is a breakout you wouldn't really want to trust. Let's look at an example where it actually did play out. So you can see consolidation here, and then eventually ATR starts rising on the breakout, and then it still rises as price continues, that's the position you want to sell and hold. This is pretty much the exact opposite, where the ATR is falling as you get in a breakout. That's something you don't want to trust. So yeah, it's an opportunity where it's not a consistent trading strategy. It's more so of an opportunistic approach to how cryptocurrencies move. So I'm going to keep a close eye on that. But in terms of my main focus, at least for this week anyway, it is going to be on euro dollar sells, probably this afternoon or tomorrow. So yeah, I want to see if price can go and take out that high post New York session today, and then I'll see if I can get some sells. And then the midpoint is going to be my main attraction point, which is 1.52. I'll see what happens with pound, because that might be a nice sell, but maybe Thursday, Friday. But yeah, I'm trying to make sure that I'm focused where the best opportunities do lie, because when you do trade a lot of markets, it's easy to get distracted with some good opportunities, but the idea is that you're trying to find the best, because that's the whole advantage of trading multiple markets, is that you have the luxury to choose the best opportunity available if it's available. If you just trade one market, the benefits there is that you get consistent exposure to one market. You understand the characteristics well. You probably trade it a lot better than someone who trades a lot of markets. So that's the main benefit of trading one. Trading many, you probably don't have as deep understanding as someone trading just one, but you have the flexibility to pick and choose where your time and where your money's allocated. So you have to really lean into the benefits. If you don't, then there's no point. You might as well just focus on one. So if you're going to focus on multiple markets, a part of your edge is going to be your selection of trade, because I could look at 20 markets right now and probably pick the worst one to trade if I wanted to, or I could pick the best one. And of course, which one I pick is going to affect my P&L in the long run. So you want to focus on the better trades. And again, when you do that, it means that you will leave some winners alone that play out, which you might look back, oh, I should have took that trade. Again, shoulda, woulda, coulda, not a really good term to be using trading. And that's where rules come into play, objective rules. So you can say, okay, if it has this, and this, that's a good trade. That's worth my time. If it's only got 3 of those, it's not quite worth my time. If it's got 2, I don't want to be even remotely interested. And again, just keep it very simple. Learn your rules. It's going to take you very, very far, especially when you have emotional turbulence after a loss streak or even after a win streak as well. But yeah, EURUSD, from how I trade and the objectives I'm following, fit in the criteria the best. So that's where my focus is at the moment, and pound USD as well, but that's just not quite at my area yet. So I'll focus on those two. Like I said, BTC opportunity, keeping an eye, but again, that could be a while still. So something just keep in mind. But don't forget as well, I've definitely done that before, where I'm looking at a long-term play. It didn't happen till like 2 months later. Forgot about it, missed the move. So yeah, keeping an eye on how we do develop. But in terms of the other indices, I was meant to go through the rest of them, but you had a look at AUDNZD. So in terms of the rest of the indices, again, they've all had kind of big reactions. US 30 is the most interesting. I forgot to mention this. US 30 is the most interesting. Why? Because look where it's reacted from. It's reacted to a retest of prior major highs from 2024. Now, this is effectively the repeat of the pattern which we did in April last year. So actually a year today, pretty much. If I go to the weekly chart, actually see it better. So you can see we had the prior significant high over here. If I take that across, you can see we had the breakout, effectively the retest, and from there continuation. That is effectively the same pattern which is happening right now. Of course, it doesn't mean it's guaranteed to play out. It just means this is effectively where a lot of people are looking at buying. And if you have, and if you're looking at kind of position plays, this is effectively a nice reaction at a significant area. So if price does go and break structure now, and takes out highs, that for me would be a very strong bullish signal, because we've had the rejection of strong support. We're seeing buying pressure come in, and we're seeing sellers fail at holding resistance. Yeah, after that, I'm looking at pullbacks and I'm starting to look for a trend. Again, not guaranteed, but all you're doing as a trader is just stacking probabilities in your favor. This would be a very, very nice opportunity, especially if you're looking at kind of buying dips following trends on indices, because a pullback like this doesn't happen every week, every month on a major US indice. Same thing for the S&P, same thing for NASDAQ as well. But US 30 itself, in terms of the technicals, are doing a lot right now. So I would keep a very close eye on this. And if you have a look at the NASDAQ as well, of course, that's been falling too. I don't think, has it tested? No, it didn't test that area. So yeah, in terms of the technicals, US 30 looks a lot better. It would be nice if the NASDAQ was testing that high as well. I mean, again, we actually had the same pattern on the NASDAQ last year too. They all did the same thing. So you can see we all came back to the recent swing high, broke it, retested, saw the continuation. This time, haven't quite got there yet. We might still do, so I'm not going to write that out. But of course, momentum's picked in. So with the NASDAQ, the key area of interest is, what do we do here? This was a significant level of support. It kept us in a range. We broke out last week. Now we're back there again. You know, is this going to be an effective retest, or is this price looking to break back inside the range? And this was just a big kind of liquidation event, taking out all the buys there, maybe trapping some sellers, and then we can look at the reversal. Either way, there's a good opportunity to be had. If we do reject this successfully, that's a great sell opportunity. If you do break above, that's a great buy. So, you know, either way, risk reward is going to be your best friend here. So in terms of finding out which opportunity is going to be, because effectively, you know, that's the answer. That's the question we're asking. That's the answer we're looking for. I would wait for the daily candle to close, because this is a daily level support. So you don't want to be necessarily reacting to what price is doing in the 50-minute, because the 50-minute isn't going to dictate that larger move. 50-minute, you're there for short-term moves. You can take advantage of the intraday opportunities. But if you're looking for direction, daily is going to be your best friend. So we're going to see how the next maybe 2 to 3 daily candles close. If today, Thursday and Friday, all failed to close above that level and provide some nice wicks, then yeah, I would have a bearish bias. I'm looking for price to roll over back to lows, maybe back to that major support level. If Wednesday, Thursday, Friday do successfully close back above and stay above, then this looks more like a fake out. And especially if you can hold support, that's your buy opportunity. And I would say at the very least, we're looking for a push to the midpoint of the range, which is 25K, just above 25K. So if Wednesday, Thursday, Friday close above. So, and again, this is not so much, you know, intraday plays. This is more so you're waiting for price to show its hand, and then you position yourself after. Any trades before are kind of more educated guesses. Well, everything's an educated guess, but it's a guess with less information. Because I could try and short this now. But that's an aggressive trade. You're kind of betting that price will reject when we haven't really seen much evidence. Of course, the advantage is you have a better entry and a better stop loss. And if it does play out, probably better risk reward as well. But if you can wait for Wednesday, Thursday, Friday, that will give you so much more information about what price is doing next. So the odds of you placing a trade and winning that trade is a lot higher. So I would wait for the next few days to play out and see what price does on the S&P as well, because we're effectively in the same situation too, which is, again, support there. Price broke below. Now it's breaking back above. Again, let's see what Wednesday, Thursday, Friday brings. Do we hold above? Does price break back below? If we can get these two markets to match, as in they're both holding resistance or they're both breaking above and holding support, then it just becomes pick one of them. You've probably got a really nice trade in your hands. And again, I'll be looking at that midpoint as a target. So what's that? 67.50 and around there. And then US 30 is a different situation altogether. I'm already very bullish on US 30 because of where we're respecting. I just want to see price break highs first, and then I'll look to try and follow that. But yeah, indices for me, I'm not interested this week, but next week I feel like I will be if I can see clear opportunities. But we're pointing that direction. So if US30 breaks the high, I'm watching that next week. If NASDAQ respects the resistance or breaks above it, I'm watching that next week. Same thing with the S&P. So this week is more like information, set the bias, set the direction. Of course, you can play some trades this week, but I would keep it short term because direction, at least in my eyes anyway, is not fully clear. And then once it is, swing trades come into play, and you can day trade that too. The thing is, if price is going to make this swing, okay, yeah, it would be great to find a swing trade which you can hold, for a few weeks as price comes back to highs. But to maximize the opportunity, you want to be looking for intraday plays as well. At the end of the day, we are traders here, so you do want to trade the market too and really exploit it. Because if you think about it, if you're an investor, you're probably looking at this dip and saying, okay, I'm just going to place a buy here, not going to check it till the end of the year or however long. So as a trader, you want to be a bit more aggressive than that, a bit more flexible, which is placing these smaller bets, but more of them, and then really taking advantage of the move. So that's kind of how I'd be looking at it. But yeah, let's go and break the highs first before I would commit to that bias, and then I'll see what happens with the Nasdaq and the S&P, because I want all biases to agree. I don't want it to be okay. Nasdaq is rejecting highs, S&P is rejecting highs, but I'm looking at buys in US30. Doesn't really make much sense. But yeah, so as we go into the New York session, we'll keep a close eye on Euro. That's the main focus. If I do actually get a setup on Euro, I will post it in my Telegram group. It is linked in the description below. So if you're interested in that, check it out. Yeah, completely free to join. If you guys haven't checked out the new Elevating Traders platform yet, make sure you go and do so. It's completely free to join as well. If you're interested in using AI in your trading, using AI agents to build strategies, to backtest strategies, to set alerts, to check fundamental analysis, I highly recommend you go and check it out. Again, free to use. Just sign up. You get access to expert agents on those particular fields, and especially if you have an idea which you want to test, but you want to do it quickly, great place to start. So go check out Elevating Traders. Again, just elevatingtraders.com, completely free to join. And of course, once you do sign up, you have the ability to not only build your strategies, but there's trading opportunities, trade ideas there as well, which you have access to as well. So if you haven't checked it out, guys, make sure you go do so, completely free to join. Okay, I'll go through pound Aussie, then we'll wrap up the stream for today. I have not looked at pound Aussie yet. So GBP AUD, you said you're looking for a buy, is that right? Check pound Aussie, is it buy? Okay, I like where we're coming back into, because effectively price has broken a high and now come back to retest it. Looks like we're coming back into, so we're coming back into the high there. Now for last week's price action, it looks as if we're coming back into the lower half of that. So yeah, it's naturally a nice place for a buy. Would I bet on price doing that? Not entirely. There's not any evidence to say that we have to do that. Just as much as this could be price reversing from this bearish trend, it could easily just be a bigger retracement within it for us to continue lower. So it's really 50-50 right now. The only edge, the only opportunity you have is that price is testing prior resistance, which we could see a reaction of and see a push higher. So I do like the buy short term, but I would say as we come back to the midpoint of this bearish leg, that's where your edge will start to decay a little bit, because now we'll probably see some sellers come in. We might continue lower. Of course, we could continue higher. But this is where the uncertainty comes a lot. The uncertainty comes into the picture a lot more. So yeah, for pound Aussie, I like the buys, but only roughly 1.925 roughly. So once you get here, I would say that's the time to start managing risk. Again, not that price can't go higher, not that you can't target higher, but I wouldn't be trying to force price to go higher there. This is where you can find an opportunity. Once we've already seen the reaction, it probably will start to decay there, because it's not like you've got a large daily trend in your favor. You don't. Effectively, you actually got it against you. So yeah, short-term buys, but that's about it. And yeah, and for gold, I don't really see much opportunity in gold either. Just because we're coming to the 50 of this last pull here. So I've drawn a fib from the high to the low. This is the midpoint of that push. I don't really want to be buying gold anymore. You know, this was a very nice move, but now we're coming into territory where if sellers are still active, this is probably where they step back in to try and push price lower. So I don't want to be buying into that. There might be some sells as well, because I don't really believe in this move here. But there might be a short-term sell back into structure, and then we'll see what happens. Maybe price finds support, maybe we continue, but this could be a nice short-term sell to look into. Also coming back to highs there as well. So gold, the only opportunity I see, I think the buyers are kind of done, so I'm not really interested in buyers anymore. Short-term sells to try and look for the pullback of that move. So that's effectively the opportunity I see. It could lead to a lot more, but you know, we're not fortune tellers here. So I like gold short-term downside, and then we'll see. I think in terms of opportunities as well, as we respect the high here, maybe a push in the New York session, that could be a nice sell. Back to structure there. That would be a really good move anyway. And then I'll call it a day there. But short-term sell. No problem. Okay, yeah, guys, we have reached the end of the stream. If you have found it useful, please be sure to smash the like button. If you have found it useful, learned something, I do really appreciate it. It does really help out the stream as well. So drop a like if you have enjoyed it. Subscribe to the channel if you want to see more. I'm live every Wednesday, 10 a.m. UK time. The clock's changed over the weekend, so it might be a bit of a weird time for you guys, but the stream's always line with 10 a.m. UK time. But yeah, so if you have enjoyed it, subscribe, check out other uploads. If you do have any video ideas as well that you want to see in the channel, so if you want to see me talk about trading strategy, psychology, or a certain idea, let me know as well. I'm more than happy to take ideas in as well. And hit the bell too, so you don't miss out on any streams uploads in the future. But I will be live again tomorrow on Trader Nick's channel. So if you head over to Trader Nick tomorrow afternoon, I'll be live on his channel as well. So if you do want to see some more analysis from myself, feel free to check out that stream as well. Yusuf, yeah, I think that it's because of the clocks, my man. All right, take care, Poppy. Appreciate it, Matthew. But yeah, the clocks went forward, I think. Yeah, forward over in the UK. So the times have changed. They do this twice a year, and it always happens every time with my streams. So yeah, but yeah, 10 a.m. UK time again. Same thing for next week as well. So I do apologize. But guys, appreciate you tuning in. Have a great day, and I'll catch you all in the next one. Take care.